Uh,
Sure.
yeah. So good evening, everyone. Today we have with us Ms. Debolina Bose for another episode on Guest Talk series of 2022. And Ms. Debolina is currently working with Grant Thornton LLP as the Director of Audits. And she has over 14 years of experience in statutory audits in US GAAP, IFRS, and IGAAP. She has worked on various public and private companies across industries, specializing in the CIP industry, technology audits. And before joining Grant Thornton, she was associated with KPMG as well as EY in a client-facing audit service role for India offices, wherein she was handling the audits for various listed clients covering the CIP of the software companies. Ms. Debolina has expertise in the CIP technology, software, real estate, and NFP sectors. She has an MS in finance, an M.Sc in economics from St. Xavier's, and a CA as well as a CS from ICAI as well as ICSI of India. So on behalf of the batch, ma'am, I welcome you and over to you, ma'am.
Thank you, Shikhar. Thanks for that introduction. I'm glad and very happy to join all of you out here. So thank you for taking out time on a Saturday evening, and I hope I'm not in between you and your dinner. So definitely I'll get started, and we'll go through something interesting and session. So let me know if you can see my screen. I'll just try to share my screen and let me know once probably it's visible.
Yes, ma'am.
Yes, ma'am.
Is it? Awesome. All right, so let's get started. Well, today we're going to talk about financial inclusion, innovations, and storytelling. So how we're going to, frame up the deck and the discussion would be mostly a little bit about financial inclusion, how it looks like, and how innovations play an important and pivotal role in financial inclusion. And then how do we as leaders, you all are future leaders, and of course we will be also needing a lot of storytelling when it comes to data and innovations. So how do we weave that together so that we kind of have the right approach and we can go ahead and become the leaders of tomorrow? Um, Before I start, well, everybody likes, to tell story, and little children do that pretty effortlessly, and great artists do it with a lot of talent and years of practice. So somewhere in between are people like you and me, right? So in a VUCA world, I would say these situations, the VUCA situations, help business leaders make decisions and problem solving towards the future. So if a leader kind of knows there is an uncertainty in the market, they can mold their decision making and risk avoidance to protect the organization. So for leaders, basically in today's world, VUCA means being more agile, being more flexible, and I think we all are aiming towards that to face the changes. I'll tell you a quick, my experience when I was an intern doing my CA. One day I just messed up all the deliverables, and my manager scolded me like anything, and I started crying. So then he came down to me and said that, hey, why are you crying? Why don't you do something? Why don't you jot down your top 5 skills, summarize them, and just see that, what are your top 5 skills and how you can probably leverage them and, do better. So what I did was I went back, I summarized them and rated my top 5 skills and started utilizing them in my job. And it was to my disbelief, by the end of the year, I not only qualified my CA, but I also turned out to be a high performer in the firm and was applauded. So I went back to my manager and I asked that, hey, what did you say? He was like, no, those were your rare and unique skills that you had. But today when I realize it, I see that probably unknowingly what I did was I utilized the data about myself, which I probably did not know. And when I kind of wrote them down, I kind of visualized, I kind of rated and saw the differences across and what I was good at and what I was not so good at. Unknowingly, it was so powerful in helping me groom as a professional, as a leader, and to weigh in my success and my failures. So today on the screen, you're seeing some big names, right? National Geographic, Spotify, Google, John Hopkins. So how are these relevant in today's discussion? Any idea? Well, I'll give it to you. So Google, for the past decade, in fact, Google's annual year in search campaign has used search data to create a video showcasing year's most popular search terms. In fact, the data analyzed for the campaign is visualized in a way that connects with the audience a lot. So they kind of did things which really people wanted them to do and analyze the data accordingly. John Hopkins, again, you have been seeing this name a lot since the COVID-19 pandemic hit us. They have gathered the most current data to create real-time dashboards, in fact, and that displays good information relevant to everybody, and it is constantly updated. I mean, every time we can just Google up and we can just see John Hopkins updating the data, and they have maintained that kind of social responsibility to improve healthcare and drawing attention to a wider audience because it is providing us relevant data, what's happening across the world. Again, another name which is very familiar to all of us is National Geographic. I mean, National Geographic has been implementing a lot of data visualization. Many of you might already know that they require interaction, that encourages users to spend more time on their website. They kind of, the resource links National Geographic, in fact, with discovery and innovation, which again helps in developing not only their brand, but also the resource uses data to create a connection between the readers and science. So that is how they are being more relevant. That is how they are being more impactful. That is how they are doing things which is more relevant to the audience. And again, another very interesting name is Spotify, which gathers user data to create annual wrapped slideshow of users, how many users are listening, their history, including the favorite genres, the songs, and the artists. And uh, it is basically personalizing the user experience. I mean, when you go to the site and you listen to a particular kind of music and you open it next time, you probably see your favorite kind of music popping up again, and that's how you kind of know, oh, hey, how did Spotify know even I like this song? So that's the connect that they are building in it. Well, as we go ahead and we talk about financial inclusion, before that, 25 years ago, Bill Gates said we need banking, but we do not need banks anymore. But at that point of time, maybe 25 years ago, he was naive. I mean, banks over the years have not only grown bigger, but there's been more market share, more customers than ever before. And we do not need banks for borrowing money or making payments anymore, right? Or investments, in fact. But probably we need banks to store the money with trust. And that's where, my friends, the rubber hits the road in banking. And that's where technology came into rescue with a new industry called fintech, where it's not finance versus technology, but more like financial inclusion meets technology. And when I say that, I mean, there has been data which shows us that 7 out of 10 families are unbanked, but probably they can afford it, afford the financial products, afford the banking if the prices were within their means. So with that, we come to the question that what is really financial inclusion in that case? So financial inclusion is nothing but, am my screen visible, guys?
Yes, ma'am.
Just a second. I think there is some lag. Please excuse me. Yeah, let's go ahead. So financial inclusion is basically the process wherein it's basically the process where you are having it's a process of ensuring the access to the various kinds of appropriate financial products and services needed by all the sections of the society and the vulnerable groups at a at a price which will be fair and I would say transparent to all of them, and in a way that is accessible by all, basically, so that the institutional players playing in a such a mode that this is something which is be accessible to everyone, right? So when we're talking about financial inclusion, it means providing probably a range of financial services to people, and particularly to those who are unbanked. And here is where technology, and we will be speaking about that in a couple of slides, became very important to categorize the financial inclusion in two parts. And one of them being the financial inclusion on the demand side, and one being on the supply side. Well, so it's the duty of the government and the central bank of the country, of course, to provide access to financial services to unbanked people. But when financial institutions of the country are not providing a platform or services to those unbanked people, then what does it mean? It means that financial inclusion is not happening from the supply side. And when all the facilities of providing the financial services to the people has gotten provided, or we can say that the access is there, but people are not utilizing those services, it means that the financial services is not happening from the demand side. So the demand side barriers are basically things like high cost transactions, lack of awareness, hassles related to documentation. We see these a lot in the villages, and also in some parts of urban areas where the network is not that good, and easy access of timely, even doorstep service from moneylenders or internal resources. So the supply side barriers are definitely unbankable deposit loan account is too small, distance from bank, high transaction cost, and likewise. So with that, I just want to check with you all. Do you have any questions?
Ma'am, we don't have any questions now as of such. Can we ask the questions at the end after the completion?
Of course, sure.
Thank you.
I'm sorry. Are you able to hear me?
Yes, ma'am.
You're on mute, ma'am.
Am I audible? All right.
Yes, ma'am.
Sure. So according to the World Bank studies, globally around 1.7 billion people, or in fact 31% of the adult population, lack access to financial services. And financial inclusion is definitely a key enabler when it comes to UN Sustainable Development Goals, which will be a key driver of reducing poverty and enhancing shared global economic prosperity. So access to these financial services definitely enables the poorest and the most vulnerable society to step out of the poverty and reduces the inequality in society. Secondly, another very important thing is financial inclusion not only helps individuals and families, but collectively it develops entire communities and can help economic growth. So financial inclusion is about enabling and empowering people and communities. When I say enabling people, it is to have the ability and the tools to manage and save their money. And when I say empowering people, it means the skills and the knowledge to make the right financial decisions. Uh, Another important thing is participation. Participation within the financial system leads to all the kinds of individual benefits, which includes ability to start and grow a business, which gives people an opportunity, like through microfinancing schemes, for example, to better long-term prospects, being able to pay for an education for children, which in turn enables a new generation of educated and informed individuals. Also, the ability to handle uncertainties that require probably ad hoc or unexpected payments or financial shocks. Financial inclusion through access to an account, savings and payment system, whatever it be, enables potential and empowers the community, empowers men, women, whole communities. And this in turn would promote investment within the community, provide jobs, and again, research shows that the employment boosts the status, the income, and one's outlook basically on life. So collectively, this will definitely help to invigorate the economies. And so when we say that, another interesting thing comes to our mind is how about digital payments? Digital payments can deliver global financial inclusion. And how is that? I mean, we all know about the mobile payments in particular, which represent new potential for emerging economies to gain access to, say, for example, mainstream financial services like money transfers, credit scoring. I mean, these are things which are a part of our day-to-day life now. And digital payment technologies can end financial inequality, at least to a large extent on a global scale, by providing previously unbanked population with the much needed financial services. And there is also considerable evidence that poor benefit hugely from the basic payment services, which are increasingly becoming available worldwide with the innovative mobile payment technologies. And even these aren't just omni-channel or omni-tech, I would say, but they present an opportunity for an omni-culture, right? Where transactions are available across borders. It also provides the opportunity to remove any kind of technical inequality on a global basis. So when I say that in terms of analytics, right, in the financial services and financial institutions, both retail and commercial have more data on their customers right now than anyone else. And I mean, if you just search their website, sometimes you will, maybe in an hour's time, you will get a call from them saying, hey, are you looking for a loan? Hey, are you looking for any kind of personalized services? Or do you want to open a demat account? And both retail and commercial financial institutions have more data on their customers. So, but they still struggle, to extract meaningful information. There's so much of data. I mean, and to use it for exact good business decisions. So when I say that, what do I mean? I mean, by some estimate, businesses using only probably 0.5% of the available data. So to turn this data into insights, firms must overcome the data stuck in silos and incompatible formats, privacy concerns probably. So this is costly both in time and money, my friends. So firms needed a new approach. The devil was definitely in the data. So for firms with varying account structures and naming conventions, finding the the right data was rarely simple, right? So firms, what they did, they started preparing the data for machine learning, making it like kind of a priority, okay, to label a lot of data. So what it means sourcing, it means, making the data, organizing them, curating them, the unstructured data, which was into text, into images, into audio. They may even make them more creating like a synthetic data, mimicking the real client profiles to make probably the training the systems. And the volume and speed of this newly available data was exploding. And we could see, instances where there were probably 40 to 50 zettabytes of data created annually. So how can we make more sophisticated data-driven decisions? That was the question. So first, we need to understand when to sacrifice sophistication for speed and when vice versa. So making sure that the data scientists and business leaders are working together and match the type of analysis to the problem we are trying to solve was important here. That's where something launched, which is data analytics, right? And when it comes to the finance world, when it comes to auditing the finance world and looking at their portfolio, data analytics basically represented the suite of separate analytical routines that could be applied to any general ledger. And This general ledger data set basically assisted teams in performing risk assessment and substantive procedures and in identifying other insights which help to add value to the particular clients. And the professional standards required the engagement uh, where they were involved to perform these procedures in response to one, the risk of material misstatements due to fraud, and in particularly the presumed risk of management override of controls. So this journal entry testing, the data analytics involved in that was a required response to this particular risk of management override of controls. Irrespective of the risk assessment, this was a mandatory thing. And there is something called transactional scoring analytics, which we will be talking about in some time. Within the data analytics is an approach which was used to this presumed fraud risk. So many approaches can be used to test this fraud, these journal entries. It can be various platforms. It can be a smart analyzer. It can be even a manual filtering in Excel. That also helps. I mean, smaller companies who cannot build a bigger software to do that, they can go ahead with that. That also helps. And whether you use any ERP, however complicated that might be, uh, the auditor and the finance department, they would be able to basically test the general ledger data for completeness. They will be making it readable for the ERP. They will be able to flag any specific transaction types which is required to run the reports, whether it be a revenue, whether it be an expense. It can be a fixed asset. It can be an accounts receivable. And they would be generating reports for these, I mean, for whichever ones they would want to, or which would serve their purpose, and perform even similarity analysis where required. So with that uh, came something which was very, very relevant, that there were two parts to it, to this. So as we deep dived, we have the audit data analytics and the automation. So sometimes when we talk about innovations, the data analytics, the automations, how are these a little different? I mean, there are small things where we can identify some differences. So when we are talking about, see, the audit data analytics, it's actually described as the science and art of discovering and analyzing patterns, identifying some kind of anomalies, and extracting other useful information in the data which is underlying or related to the subject matter of, say, through analysis, modeling, visualization for the purpose of planning or maybe performing the audit for a company. So essentially, the audit data analytics are actually techniques that the clients can use to perform or supplement various procedures, which include elements of risk assessment. It can include tests of control, substantive procedures, and even concluding procedures of their financial controls within the company. Whereas when we talk about the automations in comparison to a same as last year kind of approach to developing substantive audit, one alternative is to have teams leverage automations, which can select a sample, say, of an item of detailed testing, perform recalculations, summarizations, re-agings, um, to provide a kind of standardized workbook in which to document the results of substantive testing procedures. So the benefit would be teams would have the option to customize the default setting for some of the extractions. Teams can also modify the weights. We will talk about the weights in a little bit, uh, which can be a normal, it can be none, it can be elevated depending on the risk of the engagement. This would help in customizing the results for the client and making it more precise for them. And the methods like bifurcation can help in running the large data in bigger companies and give them substantial coverage. And this can be used a lot in simplifying the data, in visualizing the data, in making sure that we are using the right data for the right work. And when we look at this data analytics that we first talked about, there is again something called, say, a revenue analytics. So what do we mean when we say a revenue analytics? It typically means it's a form of audit data analytics, of course, that may be used as a response to address a risk of material misstatement in revenue due to a fraud or error, because revenue is the place where we can have the highest chances of errors in a layman's language. So in conjunction with these test of details and test of controls, so the revenue transactional scoring analytics are designed to be used by clients when performance obligations are fulfilled upon transfer of control at a point in time. For example, there can be a ship and bill, and at that point, we can implement this to see whether things are in place or not. And there are limited adjustments to this transaction price due to variable considerations. For example, there can be returns and rebates. So in particular, the analytics are designed when occurrence or accuracy are the relevant assertions, regardless of the risk assessment that they kind of involve. Again, when we talk about volatility, we talk about revenue volatility. So what is it? So these are kind of analytics, audit data analytics again, that can be used as a response to address a risk of material misstatement in revenue. So such analytics would allow the clients to be more precise and precisely respond to the assessed risk by focusing attention on notable items instead of everything. And that represents transactions with a greater amount of risk. So this data analytics would help, and it's designed basically for revenue streams where there is an expectation of consistency at an individual contract or say a customer product level. So due to the nature of the product or service and how basically the entity contracts with these customers. So if I have to give you an example of this type may be a fit including the recurring portions of subscription revenue. Maybe the rental revenue is a good example, and even the royalty revenue, since the revenue recognition would generally be ratable. So for those, volatility would be definitely something which would be very relevant. And on most of these occasions, if we have to go through these audit data analytics, it is generally what we do is transactional scoring and account combination analytics. Rarely we go for a digital analytics or a text and letter analytics, especially for companies where there is a lot of risk on in terms of management override of controls, and especially for, I would say, the public filers, we would go for a digital or a text letter analytics where management override of controls is something that we want to test and meet our internal requirements for that particular job. But in case the client is not very big and only when a specific instance of fraud through the testing of journal entries is found, then probably we will not go for that, because that will entail probably more time than the actual results. So we are interested in the data only when it is relevant and only when it is useful for our actual purposes. So if we have to understand, engagement teams apply, of course, a professional judgment when selecting, their testing, their scope, and clients would be very, very specific about that. So data analytics would be kind of an identification process based on some scores, based on some standard deviations and other filters, and it's not considered a sample. So there is a process of, and I would not go into much detail because this is just a quick discussion, and we can go on for hours with this. But it involves a lot of extractions. It involves a lot of manual filtering, where the scoring ratio value for filtering is there, and there is a financial measure and direction, and a value for filtering, which is both manual and automated. And what we get is basically a summarization of the J's identified for analysis, and those would be the ones where we are expecting some management override of controls happening, some fraud happening, something which is not very cool. So this is something which we want to identify, and that's how we go ahead and take a look at what it is and how we would want to approach it. So when we develop that toolkit, that would have a lot of standard extractions, which will definitely we would like to perform certain analytical routines on that. And every journal entry line is analyzed to determine whether it meets the criteria of the standard extractions and whether it meets the scores. And weighing will be normal by default. However, it can be also none if a particular extraction is not applicable. So it can be elevated if an engagement has identified a fraud risk that specifically aligns to a particular extraction. And for example, the extraction of for journal entry is posted and approved by the same user. If the approval detail is not included in the GL details, then probably that's something that we would like to explore more and we would like to see what is going on. So that is, my friends, in a nutshell, more about the audit data analytics which is used. Then we will, of course, talk about innovations a little bit. Well, for innovations, one thing is very, very interesting that Albert Einstein said probably many, many years ago. So he said that you can't solve a problem on the same level that it was created. So you have to rise above it to the next level. So I think it's applicable as well in our daily lives. I mean, it is always said that if you did what you do, then you will get what you got, right? So I think always we have to rise above the next level, and that's the irony, that's the good part of it. So when it comes to innovations, there are a couple of innovations, and these are only some of them. I mean, we can go ahead and look at various ERPs, and we can do a variety kind of innovations, right? If you look at the client into their financials, how things are going on, we can probably look at something like an accounts receivable automation, which is helping and assisting in performing audit procedures in response to risk associated with the existence and accuracy assertions for accounts receivables. It also recalculates the age of the outstanding invoices, the flagging any unusual items, generating any selections for confirmation or other procedures, and comparing receivable balances between the subledger and the general ledger, and generates some other analysis for use. So the AR automation, the accounts receivable automation has not been designed to achieve the ADA credits. Similarly, if we talk about the property, plant, and equipment, it assists in performing audit procedures in response to accuracy and valuation and allocation assertions. So as well as the completeness and accuracy assertions related to the depreciation expense. So similarly, if we talk about, say, the inventory price testing, so this automation again assists in performing audit procedures in response to the accuracy assertions related to inventory for purchase and any manufactured items. Well, it recalculates the extended cost of inventory, flagging again any unusual items, calculating any period over period item cost, any fluctuations, any generating some kind of price testing selections, and comparing, say, the inventory balances between the subledger and the general ledger, and generating other analysis for use by the engagement. So the automation has not been designed to get ADA credit, but it's more like an innovation, right? Similarly, we also have inventory valuations. So along with our price testing, what sometimes clients would like to do is valuation of their inventory. And in normal times, it's generally a much more tedious process, but when we have a kind of an innovation, it is helpful in application of the lower of cost or net realizable value, as well as reserving recorded for excess and obsolete, the E&O inventory. So the automation identifies and produces a summarization of all the finished goods, inventory items on hand at end of the period with a unit cost greater than, say, the average selling price per the the current period sales transaction. So similarly for the E&O kind of products, the automation also calculates various statistics and flags that aid in assessing the reasonableness of management's input and assumptions into the estimate. So there is again something which helps some of the innovations a lot. It's upstream oil and gas, which produces monthly profit and loss analytics to review the risks associated with production volumes, maybe pricing, maybe expenses, and in addition to, well, analytics to investigate, I would say, and corroborate kind of patterns and unusual fluctuations. So these are kind of things which is utilized a lot in when it comes to with the clients, with the kind of flavor that they add, and with the kind of efficiency that adds to the audit. So with that, how are these innovations? We talked a little bit about innovations very broadly though, but how are all of this changing the audit as a whole, if you ask me? So if I have to say that, I mean, a faster and of course better audits are providing, of course, better insights to the business. And we started with that, right? I mean, we all would always like to do what our audience would like to hear. We would always like to bring to the table what the clients would like to do. And what companies need to be doing today is that they should be looking for auditors who are looking to innovate so that they can take advantage of the technologies and the capabilities that we have today. So as we use technology more, our ability to analyze the data that we use from our clients is going to be putting us in a position, I believe, to give us much greater insights, maybe much better business observations, recommendations. Just a second. Yep. So as we are looking into this and the companies are trying to strategize on that, I believe to give them a much greater insight, maybe much better business observations and recommendations to improve not only their controls, but maybe also their business. So we are able to do analytics now that we never dreamt of before. And how is that happening? How that business is running, how successful it is, and where they have opportunities for improvement. And so when we look at what data analytics can do, data analytics can actually paint a picture for us. What is that picture all about? What's going on in the business? And helps us then overlay the picture on top of the financial statements. And we can see where there is a potential in the financial statements that needs some improvement. And that is where innovation is changing the audit. That is where 24-hour process per quarter is being brought down to 3 hours process per quarter. And sometimes it could be done even in less than a day. And this is a good indication of the kind of the payback that the clients are getting. That is highly accretive, quick turnaround, and quick payback time. So one of the most interesting things about the clients is that it tells a story behind the business. And that is how, my friends, it is impactful. And of course, one of the most fascinating areas, of course, in today's world is artificial intelligence. Machines are now able to see these patterns in the data that would be difficult, if not impossible, for auditors to see on their own. So I think the audit process from a client's perspective is that we are becoming better and less time consuming. So there's a lot of opportunity, I would say, for the client to save time, expense, and agony, if you will, through the audit process. So I kind of envision us having the ability to go directly into the client system and maybe gather the data, which is great for our clients because it is less time consuming for putting them together for us. I mean, I couldn't imagine that when I started my career as an auditor, and today it's like that's the daily job. I mean, we never did analytics when we started our career, but that is a part and parcel of audit when we look at it today. And of course, I think we're going to have auditors in future that they can look at a set of financial statements and look at all the analysis around those financial statements and really be able to hear the song of that company, that the opportunities are endless. And the more I think we are willing to embrace the change, I think, of course, sky is the limit, I must say. So when this innovation and came into the business, into our day-to-day business, we understood that innovation alone cannot make that difference. Of course, it has to be with a story, and we heard about that. I mean, when we started off with those four big names, they all had their story in line to showcase their innovation and their skill sets. And the stories are just data with a soul, I would say. You know, no one ever made an innovative decision because of a number. They need a story. I mean, it has to be compelling. We rely on data to tell us what has happened, and stories tell us what it means. So the greatest value of a picture is it forces us to notice that we never expected to see. So basically, it's our blind spots. And data storytelling is the best way to use data to create the new knowledge and new decisions or actions. And it is it's an integrative practice, I would say, that incorporates this knowledge and skills and from several disciplines. I mean, it includes communication, analysis, design, and it is practiced, I would say, across so many fields, and it is used to address variety of challenges. So the story is meant to explain the data and why it matters. So there's all kinds of stories, most of them visuals can help tell, but only some have this focus and intent. And the data is collected and shared to help us see these patterns or have the insights that we wouldn't have otherwise. For example, when we look at our grades to see how we are doing in the university compared to our prior semester, or when we go to a doctor and he looks at our blood work to make recommendations and, hey, you have to make some changes in your lifestyle and it's not going pretty cool, that's where we are utilizing this data. And with the power of innovation, of course, comes a lot of responsibility for the storyteller, which is us. And we are going to be the future storytellers with the innovation, of course. And by infusing these data points with strategic creativity, they will become compelling, they will become digestible and impactful. So our human brain loves a good story and finds it very easy to grasp difficult concepts if they are summarized and presented in the form of a story. So this is why you would see that fables and tales have been always been such an essential part of our culture. I mean, kids do it, as we began with, kids do it very, very fantastically with the fairy tales, right? But we at our age probably find it difficult. The same applies to numbers and innovations as well. Generally, we are told that an innovation story has ingredients and it involves understanding the stakeholder expectations, set the context of your story, define the story life cycle, visualize, walk through all these big, big words. But my friends, a good communication, there's someone called Anne Lindbergh, I'm sure some of you have heard about her. Good communication is just as stimulating as black coffee and just as hard to sleep after. So I would say there are a few simple tricks that can be a game changer, and I'm sure you all are already or would be a pro at the same. Well, firstly, I would say when we go ahead with the innovation storytelling, we must make an impact. This is the same as being persuasive. So why analyze data if we don't want to change the minds, right? So effective data storytelling always offers a takeaway. And innovation data storytelling must have an emotional impact. That is so true. So leading the audience to the point is very, very important again. Now, persuasive data stories are also about bringing people to the same conclusion you have about the data. And that is effective storytelling. So it's always the third thing that we need to focus. It's always, always people, and it's never the data. So when I say that, numbers are generally boring. People are, of course, interesting. So any story which is over focused on number is never effective. Okay. So we should never focus only on the data. Sometimes people feel that, oh, if I put my slide and I put like a lot of data in the slide, probably I'm going to make a lot of impact. People would say, wow, what a great presentation. It's not the case. Even one simple data can make or break it, right? Again, mapping the visuals. There is a helpful rule of thumb when selecting the charts and graphs on your dashboards, treating each visualization as the answer to a question, and your whole dashboard being something as which can be answered like at a glance. I look at it, I know my answer. This is what it is all about. Again, assessing our blind spots and avoiding your biases is so important. So some people do not do it, but I would advise, I personally do it. I would advise all of us should do it. Uh, Pausing and just reflecting on any assumptions I'm making. I might be making, some assumptions about my audience, about the data, about the story I'm telling, or about the visuals I've created. And it's super easy to skip this step. But if you want to create a great data story, it's worth taking a little bit of time just for the reflection. The very best way to do this reflection is simple. Share it with your colleague, share it with your friend, or share it with someone who identifies with your audience, right? So it is that simple. And finally, we don't have to be a professional designer to tell a great story. Right now it's a great branding, great packaging. Oh, wow, it's financial inclusion and it's, data storytelling, something very difficult, something very new. It's packaging. Again, we are as a species addicted to stories. So even when the body goes to sleep, the mind stays up all night telling itself stories, right? So long as we pay attention to what matters most, we can lean on our existing strengths, and our existing strengths can be, we all are from diverse groups. So whether they are analytical, communicative, creative, or relational, that can create data stories, innovative ones that will help the audience know better and do better. One thing we must remember that our audience doesn't usually buy into a project or a technology. They buy into an emotion and the experience they will get from the technology, right? So as we craft and tell the story, the innovation story, the audience must identify and connect to you probably at an emotional level with the project or the technology. And if your customer is emotionally connected with you or your project, whatever it is, it will get the support what you need. And storytelling would be the game changing event. So just think about it. Uh, every innovator will possess this, and all of us have this, whatever unique X factor, Z factor. Uh, so all of us would be wonderful storytellers, and we can have our own innovation. We can tell our own story and become successful. So I leave you with the thought: what is your innovation and what's your story? So I would request all of you to go back and just reflect in your weekend a little bit, if you have some time, to see that how we can make innovation and storytelling and uh, include that, just not in this 1 hour, because this was just a very, very high level um, summary of what we wanted to talk about. Just go back and reflect what's the takeaway, what do you want to take from this, so that you can utilize that in your day to day or in your whatever activities that you do for uh, your daily life. So yeah, that's it from my side. I leave a little bit of time for, we can have some good discussions and good interactions, and looking forward to it. But again, I don't want to stand between you and your dinner. And yeah, thanks again. Over to you.
Okay. So guys who have question, you can raise your hand. Yeah, Nuku, you can go ahead with your.
Hello, ma'am. Thank you for this session on a weekend.
and it was really an elaborative session. I myself come from a financial domain, so I understand the inclusion part and how storytelling is important. So my question to you is, when we actually talk of the financial inclusion to the lowest of the income strata, we understand the analytics. We try to attract them through analytics and storytelling, because when you come from a typical public sector domain, the outreach is based on storytelling only. But still, there is an apprehension in their mind that what if something goes wrong? And especially when we try to onboard them on the digital platforms. Despite the storytelling, there lies a fear in their minds because of the frauds or the cyber crimes that happen. So, how to convince those truly innocent people through the storytelling so that our aim of financial inclusion also gets completed, and more or less also the benefits get actually transferred to them without there being any fear of their money being lost or other issues?
Right. Thanks, Tupur. I think that's a great question, and yeah, that's a live problem, I think, which we face, especially in our developing economy. And I think it's again, see, all of us relate to something. I mean, we as a professional, we might understand finance, we might understand all these financial jargons, and especially in the VUCA world. We know what are the pros and cons, but of course the innocent people, I mean, on one hand they have two options: either they go for a much more secured way of finance, or they go into the hands of money lenders and make a mess of their lives. So I think, again, what is very, very important from a government perspective, and I know many NGOs are also doing that, and there are small individuals who also helped a lot, especially post pandemic. We've seen that a lot happening, that some kind of storytelling would be helpful to a certain extent, just to explain them what it is. So when you tell them that, these are the things you need to do and this would be the result, probably that will not get them enough satisfaction. Instead of that, if we show them a real example that, hey, your friend was in such a position just like you, and now that he's able to bank, he's able to open an account, which, and that has been so seamless, and that is not very far from you. It doesn't take a lot of time to reach that place as well. You have the connectivity, you have this mobile phone in your hands, and just like you're using that to listen to a music, or maybe while driving your cycle, or by taking the rickshaw, probably if you can use this also for downloading an app for a bank and have an account, this will be the benefit, and probably show it to them rather than telling them. I mean, there is a Chinese proverb, you all have heard, that tell me and I'll forget, and show me I'll remember, right? So that is very, very powerful. Show them what it is, and then they will definitely embrace it and they will take it. It will take time. It's not possible to, do that for the entire, the entire genre of that section. But as, 2 does, tomorrow 10 will, and the next day probably 100 will. So I think it is a gradual process. It's definitely not overnight, but I think that's the way. And I think that's the way forward.
Thank you for the answer, ma'am.
Hello, ma'am. So you mentioned fintech and financial inclusion. I understood from the consumer point of view that he has more affordability and accessibility. But how can technology and internal operations of a bank can provide and enable the bank to, with an efficient or a nimble or a resilient infrastructure, and with a strategic focus on maybe productivity, quality and control, and people capability and innovation? So how can technology and operations be combined together to gain that advantage?
Sure, Rahim. I think that's a great question. And of course, that has a couple of perspectives. One is, of course, the supply side of it, and one is, of course, the demand side of it. But when we talk from a bank's perspective and more from a demand perspective, I would say that now if you see various banks, and that is true for many international banks, and that is true for some of the even the Indian banks, that they have some kind of when we go in for our audits, when we go in and see how the systems are. Previously, they would have had a lot of controls which were manual and which were not accessible to a greater, greater strata of people. But now, when we see that their infrastructure, say for example, somebody using a software where everything is automated, everything is linked to a particular ERP, and even their operations team, which is working in such a way that they work in hand. So previously it was in such silos, people were working in silos, so they actually had the data. It's not that they never had the data, but it was never utilized in the right format. So unless and until the data is utilized in the correct format, I mean, innovation makes no sense. Innovation will not have its impact. So innovation will definitely have its impact when the right data is utilized and that kind of control mechanism is built into the system itself. And once it is built into the system, it will help you to develop and generate that kind of synergies, which you will see. And uh, I have seen like couple of instances where some banks, have the integration within the system so well, and in fact, the control procedures. When you do a walkthrough of the same, you can just have a look. It's done in such a fashion that that particular, the supply side of it is taken care completely. So when it comes to people and taking advantage of their infrastructure, taking advantage of their operations, it's in sync. It was not, probably 10 years back, if you ask me, it was not there, but now more often than not it is. And that is what is helping them gain the the synergies that we are looking out for. But if you ask me, yeah, is that the best? Probably the answer is no. There are much, there, I think there is a long way to go. And I think this is something, I mean, while we are even talking, probably there's something which is getting innovated and which will probably help, in the next year, and maybe 23, we will see something brand new coming into the banking sector, and and probably the fintech industry will come in with something even more interesting, and we will be talking that point of time. Yeah.
Thank you.
Thanks the same.
Hello, ma'am. Good evening. Niharika here. Ma'am, your point towards the biases about storytelling was really compelling. Thank you for addressing that, because it was also one of my thoughts, that how can you, give something to tell if you're already biased. So, ma'am, but my question is not based towards storytelling. It's based towards financial inclusion. So, our budget recently included digital currency. They want to launch. And ma'am, given the fact that India has incredible poverty levels, financing without collateral is a huge challenge today. So how do you think these alternatives like digital currency, DeFi, cryptocurrency, and these prospects are to be there to potentially mitigate this financial poverty and include all of us actually?
Very interesting question. I would like to ask you a question against that. So when you're talking about poverty, and when you're talking about professional, I mean, people who are probably below the poverty line, how many of them do you think really understands what is a cryptocurrency?
None of them.
Yeah.
I don't think anyone can.
Yeah, I think you gave the answer. So so basically how it happens is, there, so when the budget comes out with something, of course it addresses various sectors, right? I mean, probably someone who was yesterday dealing with just a demat account and Indian shares, maximum they would be trading some foreign shares, when crypto came into picture, of course, that was something new, very, very charming, very, very fancy. And we as professionals, we as, individuals are generally always attracted to something new. Whenever there's something new in the market, whether that be a product or whether that be a service, we are highly inclined towards it, right? I will give you an example. I mean, say for example, you go into a salon, okay, and you see two different kinds of services. And one, they say, this is brand new, ma'am. Do you want to try it out? What do? We generally go and say, hey, I want to definitely try this out because this is brand new, right? And it's similarly with people who is having that access to, one, the infrastructure, two, because first, to use that cryptocurrency, you will need to have certain infrastructure, right? You would need to have a mobile phone. You would need to have that application. You would need to know what it is. You have to download it. You have to. So there are some kind of, one is education, one is the infrastructure, second is like the money. There are a couple of things which are involved, which probably that sector of population itself do not have access to, right? So they, in the first place, for them, I think the step one is opening a bank account. So they will probably not even be thinking about cryptocurrency. And we do not know what the future of crypto is, frankly. I'm a very conservative professional, so I might not be, but I don't want to be, again, biased when it comes to it's good or bad. I think it's only time which will tell us. But when you talk about somebody who's poverty stricken and crypto, probably, I mean, he might go into crypto, but not right now, definitely, unless he knows at least what a bank account is, right? And because he will not have enough resources at his disposal to explore the same.
Thank you, ma'am. And what about digital currency? I mean, since government is launching, will it be able to help people below the poverty line?
See, digital currency, so there are various arguments to it, right? So if we talk about something called, say, the digital financial inclusion, right? It kind of involves a lot of things. It involves, deployment of cost-saving digital, which means reaching, currently financially excluded and undeserved population with a range of formal financial services. So when the country is making progress towards that direction, and those sectors of population would be given some kind of benefits towards it, I think that might definitely help the unbanked to at least be interested. So there would be some kind of demand pull, I would say, right? Because from a supply side, the infrastructure is there, which was previously not there. So removing probably the cost of implementing a financial structure to bring probably access to this unbanked population of the country, it will definitely bring in some inclusion to people, because they have limited access to financial resources in the first place, right? So when they are getting this access, they can establish a kind of direct connection. And that connection will be directly between them as a consumer and the central bank and RBI, basically. But or the bank, wherever they are having their dealings with. So they will not have to deal with somebody who is intermediary, who is actually eating the bigger chunk of their income. So I think that might, make them interested in this particular platform. And we do see, previously we never saw this particular group having a Google Pay account. Now, if you just go out and you want to buy something even from a vegetable vendor, you might say, "Oh, ma'am, I have Paytm. You can pay to me in Paytm. You can pay to me in Google Pay," which previously probably, if I see 5 or 10 years back, we never saw that. Anybody saying that, okay, I have access to this. You would always have to carry cash, right? And so things are changing for the good, I would say.
Yes, ma'am, surely. Thank you so much.
Thank you.
So, ma'am, I guess that was it. Thank you, ma'am, for your time and giving us the PPT on a weekend evening.
Absolutely, my pleasure.
Thank you, ma'am.
Thank you, everyone. Thanks for being a great audience. It was an amazing session to speak to all of you, and hope you all have a wonderful year ahead and do great in your career and all the best. Um, Feel free to keep in touch. You can contact me on my LinkedIn. You can mail me, and any questions, anytime, happy to help all of you. Thank you so much again.
Thank you, ma'am.